Let's break down my $3,000 trade on gold from this week. So I'm glad I get to make another one of these trade recaps, but oh man, I gotta stop taking these day trades. Like this was literally taken at 8 a.m. and lasted till noon in the same day. And that is so unlike me. I'm usually taking trades that last anywhere from 3 to 5 days, even up to 2 weeks. But these day trades have just been hitting. I guess it's just because we've been at all-time highs and this is why it's working. But I wanted to break down my macro sentiment and my market structure that got me to take this trade. And honestly, it was such a clean one for me, only like a couple minutes of drawdown, and it was just away from there. So what was going on that made me take this from a macro perspective? We'll start with the boring side before I go into my chart breakdown. So as of last week, we were still in government shutdowns. The political dysfunction always creates uncertainty, and the markets hate uncertainty. So whenever you get a fiscal gridlock like this, capital tends to rotate towards safety, and gold historically benefits from that flight to safety dynamic. So obviously last week we also had the consumer sentiment and the inflation expectations, which came in good, but to me it wasn't beat by very much. As you can see, we only beat inflation by 0.1%, and to me that signals, yes, that the dollar might be picking up steam, the economy might be getting back on track after everything, but with this government shutdown and all this uncertainty in the markets, especially after the crash, I'm not interested in going deep into the dollar or taking any longs on indices just yet until I see some more confluences. So the Fed's only been slowing these hikes marginally, meaning yes, the pace is easing, but rates are still high, and the Fed's messaging suggests that they're not in a rush to start cutting, and that kind of tells me that the economy is stabilizing. But normally a stronger economy would mean a stronger dollar. Then obviously looking at what happened last Friday, a massive sell-off in equities, and this was just a reminder that everything is tightening, risk appetite is fading, investors are starting to wake up to how stretched valuations are. When there's a stock crash like this, while rates are still elevated, it's a bad signal for the market's balance, and it's just breaking down. And especially when this confidence breaks down, gold is usually what's catching the bid and going higher. So my thesis on this from a macro standpoint is we're in a moment where the dollar's strength reflects policy tightness, but risk assets are cracking under the weight. Add in this government dysfunction and uncertainty around the future of growth and the fear in the markets, gold just becomes the natural hedge. I'm not trading gold just as a commodity, I'm trading it as the macro hedge against policy uncertainty, volatility, and potential liquidity in the stocks. So I went long on gold not because I expected an immediate breakout, but just because the macro conditions were aligning in my favor, and then that kind of brought me down to my charting analysis for this. So coming into the chart, it's pretty simple. We're on the 15-minute time frame. I spy a low, a high, a higher low, and a higher high. So for the charting portion of this, I actually went through this the other day in a previous video where I was talking about market structure, and you can see the drawings from right here. Coming back over to this price action, I actually spoke about my current setup on gold, what I was looking at. So anyone that was paying attention in that video, you could kind of see what I was already thinking. We're already so close to all-time highs. Here's my swing low, my swing highs, my complex pullback for my higher low, and obviously we made higher highs. So for me, the biggest indication of this trade was us coming into this zone of the swing low and reacting off of it. We pushed right out, right to this area of interest right here, pushed right past it. You can see the reactions we had off of it and continued moving up for the day. Once we got back to all-time highs, this is where I was very curious because we wicked all-time highs. So that's not enough for me to just place a buy order right on top of all-time highs and think, yeah, we're going to have some sort of breakout. As you can see, we wicked the all-time highs and came straight back down. So any trader that was doing something like this is getting immediately stopped out. That's not enough confirmation for me. That should be enough confirmation for anybody to take a position. So instead of looking for just a breakout model, I'm looking for obviously confirmation. And to me, that is just seeing more market structure. So in this case, this would be my swing low. This is a strong low. We had a massive push and run from this low. And obviously that is a zone for me where I can say, hey, you know what? If price is coming down below this area again, then the trade idea is probably wrong. So that being said, we did not come down below this low. We continued higher. We had a great push above those highs, which I was very happy to see. We made a good low right here. We can hop down onto the 10-minute for a little bit more price action, just so you guys can see. So what did we do? We made a high, we made a lower high, we made a higher high, and some weird looking lower highs down here to make a higher high. So for me, now that I'm seeing 10-minute market structure forming bullish, even on the 5-minute, we're just trending staircase all the way up. And again, I'm in Europe right now, so I'm ahead on the time zone. So for me, seeing all this earlier in the day and then getting to this point where I said, hey, you know what? Like everything is aligning in my favor. The macro is already there. And now the market structure is showing me that we're going to continue bullish, especially going into the new week where we're recovering from the stock crash. I still think gold is the safest asset to be in right now. So for me, I stuck my stops below the swing low right here. This is where we had a good push. We obviously had two breakup structures right here to the upside, right above all-time highs. And obviously if we're dipping below there, the trade idea is just wrong. That's where I put my stops at where I would be wrong. If it's going anywhere through here, you know what? I'm not wrong, but as soon as it goes past this low, to me that indicates I should maybe be looking short-term bearish or waiting for more market structure to confirm the direction I should be trading in. Now, in this case, I wanted to hold this trade for a good amount of time. I wanted to be in this for mostly the week, but after just doing a lot of reading in my time during the day, I was very confident in a short-term trade, so I did have more aggressive stops and an aggressive TP. Usually I'm not looking to catch such a short-term move, but with the current market conditions, I'm pretty happy to take a short-term move and then just tap out for the next couple days until I see more data that supports another position. Now, as you guys can see, I could have had this run up way longer. Obviously, I don't like looking in the past. Taking a 1 to 6 would have been so great, but I was more comfortable with just a standard 1 to 2. $3,000 is great for the week. My biggest thing is I'm not greedy in the markets. I will never let my trades run. There's always a fixed TP for me, just because anything can change the markets at any time. Friday is a great example of that, because you could have been taking a gold position Friday, and then that's when Trump announced those tariffs against China, and whichever way you were trading, that either helped you or it didn't. Stuff changes so quickly in the markets that sometimes it's better to take a shorter position that you're sure of and then wait and reevaluate the new data that's coming out to fuel your next trade. So that was the thinking behind this trade. Honestly, it was just about the macro positioning and my read on the macro landscape right now. We do have a pretty news heavy week again. Powell speaking today. We have the Empire State Manufacturing Index, the Philly Fed Manufacturing Index, core PPI, core retail sales, PPI right here, retail sales, unemployment claims. This is going to be a big one. I know these are all tentative, but this is what I'm looking out for right now, because I do think gold can run even higher if any of these come in negative. Especially still, we are in a government shutdown, so much uncertainty. Anything in the wrong direction is just going to fuel another move of gold, and that's what I'm looking for. I could be playing the indices as well, but gold has just been giving such great market structure and giving me very quick trades. Again, I will say I'm not a fan of these day trades where I'm in a position for less than 24 hours, but I'll never argue with taking a quick trade that went in my direction with minimal drawdown. If you guys found this video helpful, be sure to leave a thumbs up, subscribe to the channel. I've been getting such great feedback and I really appreciate it. I hope this channel is really showing you guys the power of using macro behind your actual technical analysis to understand why the market is moving in a direction. But that's going to be it for this video. I hope you guys enjoyed, and we'll see you in the next one.